Okay. Share screen. There we go. Okay, so we had an idea back, in 2017. We had this powerful tool, Delphian, where we can backtest different strategies and pretty much unlimited potential, to overlay different types of signals, from Keltner channels to Bollinger Bands, all different types of things, DMI, almost everything you can think of. So we started to try and find different strategies that were systematic and that were repeatable. And, our base thesis was that, in general, the market's going to be bullish. Outside of, 2008, we do have some minor corrections, some like big corrections, but they usually come back. So a lot of these strategies that we started to think about and look to create were based off of, like Sean was saying, pullbacks, like the market drops 5-7%. We see, all these trades populate, and, we pick our favorite one. We see Microsoft go into state 2 and hit its target, and we think it's going to bounce from there. So that was our thesis going in. And, we've expanded it since that initial, the initial release back in 2018. So right now we have 11 different studies, and we're always, when we have time, we always try and develop some more. I'm sure more will come, as we, test more and more. But that was our basic thesis here. And so what we did, we broke it up into 4 different types. Breakouts, like you saw, like Sean showed you, when it's in state 1 or makes a big movement as far as different signals. So we have 2 of those strategies. The majority are in the pullback. So, this is a bullish stock. It's been going, state 1, like pullback 2, 1, 2. So we want to get those, when it comes into state 2 and meets a few different criteria, for a bullish trade. And all of these are bullish trades. We've just to answer the question now, I've tested hundreds of bearish trades, and I'm yet to find one that works systematically. So, so the pullback, that's when it goes into state 2, and then we expect it to bounce. And then the deep pullback, those ones fail pullbacks and go into state 4, and then they bounce from there. And then the bottoms, those are kind of one-offs, or sometimes the market will go into state 8, like SPX. So a bunch of them follow, but typically, you'll just have one-off stocks that are down there, and some bad news or whatever happened, and then we're waiting for a signal that it's actually a bottom. All right, so keep getting chats. Okay. So how we did this, we took a basket of stocks, and that initial list was 300, and we tested it from 2007 to 2018, all these strategies. And, it had to have a particular win rate, based off of the trade setup that we had. So long call, bull call, and a bull put. And we'll show you all those. And we'll also show you the liquid options. So we had to refine things and, test different trading strategies. And these are kind of like the best suited overall that we could find for the long call, bull call, and bull put. Excuse me. So what we're looking for is basically a 25% profit on a long call. The bull call's also 25, and then the bull put, we're looking for 80% of that max profit. So whatever you get paid with that that trade, we want to keep 80% of it. So the first one, the long call. So we're only using monthly options. we're looking at least 60 days out. So if there's nothing at 60, it'll go to 61, 62, all the way out to 180. And then from there, the strike that we're selecting, we're going to use a delta of 30. So likewise here, if there's no 30, you'll look, 31, 32, all the way down. From there, we're looking at for a 25% profit. And then, we don't have any stops on these because, pretty much the testing shows not to have stops. And what we found with all our customers is that they have their own particular stops that they want to show, that they want to trade by. So what I'll show you in the system real quick here. So if we pull up Apple, and if I was going to do a long call, just say that the trigger came out today. So this is the expiration that we'd use because it's at least 60. So that's the next available after 66 days. And then from there, we pick the 30 delta. So here's the delta column here. So the first available after 30 would be 32.58. So this would be the option that we would pick for that long call strategy. So next, the bull call. Yep, let's check questions here. Yeah, Bob, one of our longtime clients, said 15% usually improves win rate. Yeah, and everything's a trade-off with options. You start moving up the stop loss, you're going to get more losses. So everything's a trade-off as far as all these different parameters here. So we just kind of found a sweet spot, and people can go in and change those characteristics and test those. Say you want to do 15, or you want to try 50, or you want to put different stops in there. You can do that individually for each trade that populates relatively quickly. So we did the same thing. So at least 60 days. So the bull call, we have two calls. So we're going to buy one and sell one. So there's a big gap, between these. So we're going to buy in the money, and this is right above the lower standard deviation. And then we're going to sell right above it. And I'll show you how that looks out in the option chain. Yeah, no, Apple's just an example. I'm not saying it's a buy today. So when we look at this, so the standard deviation range right here, so it's 100. So we're buying the strike right above, the one standard deviation. So we'd be buying one above that. So that would be our buy, the 101.25. And then we sell right above, the current close. So we'd be selling this. So if you look at, the trade characteristics here for this, basically we're getting $6 back. We're buying, this one costs 16. So that's a net of 10. So you can see the width here between these two strikes is 16.25. So, we're already at in a good situation. So all we need, in order for this to win is for either the price to stay relatively flat. If it goes up, obviously we're going to win. But if it stays flat or, declines a little, we'll be good. The only way we lose this trade is if, the Apple tanks and gets down near, in this range, the 105, 107 or lower. So that's the only way this trade loses. And it does take a little time, but it's pretty powerful trade. The long call, this one, we have to get it right, and relatively quickly because the time decay involved with that. Whereas, the bull call, we have offsetting things. This is decaying a lot faster. It has a lot more extrinsic value on it. Whereas this is mostly intrinsic value. So that's the bull call. And if you guys have questions on these, just fire away in the chat room here. So the other one is the bull put. So here we're selling a put, and then below that we're buying a put for protection. We're looking for 80% of the profit, and then we took the risk off on that one too. So over here, we'd be selling this one right here, the 101.25, and then 2 below it, and then we're buying this one. So same thing as the bull call. As long as this thing doesn't tank, it's gonna depreciate really fast. So that's the basic strategies that we tested, and those are the parameters we use for all the testing that we do. So is there any questions on that? I don't see any. Okay. So next up, we'll talk about liquid options. So if we go back here, we talk about, we tested liquid options. So right now we have in the system available 4,000 stocks. So it's all optionable stocks in the US market. So from there, we whittle the list down. So the stock price has to be at least $20. We put in a minimum daily volume requirement. And then we also had a requirement for option spread percentage. So if you look at the money, like call, and you take the difference between the bid and ask and divide it by the stock price, that would be your option spread percentage. So we use those three to come up with a basic list, and then we went in manually and verified 410 stocks. So they're all so basically what we wanted with this is, if this comes up, it's, I'd say, a 95% chance it's going to be easily to execute a trade with it. I'm sure there's one-offs that aren't going to be as liquid as others, but in general, you always want to verify, obviously, before you place any trade. But we thought this was a good overall solution. All right. So another chat. Okay. Yeah, we haven't done ETFs yet. That'll be the next step. This is just all stocks. So what we do every day is the system automatically runs all 11 strategies and searches all 410 symbols to see if any of them met criteria for any of those different studies. And when they do, then we populate them into the system so that you can see them each day. So this is an example. This is yesterday's. So our system processes things right after the close. All of our data right now is end of day. So it takes a snapshot 15 minutes before market close, thereabouts. So we upload data right after the close, and then our system does all these processes. So over here, we have the raw data would be the pullback and breakout. And then we also filter ones that have high win rates, so over 75%, into those high probability trades. So they populate here, and then when you click on the X over to the left, it'll tell you the actual strikes that are part of the trade, how we back tested them, and how they what they apply today. So it'll tell you the 30 delta for Shopify, Splunk, whatever. And then you also, if you're a member, you get the daily email anytime the studies are finished processing. This email goes out. You can click the link, and it'll take you right to them. So what we like to say is these are all trade ideas. We're not advisors, so these aren't recommendations. These are all trade ideas. So you see, very bullish stocks that pop in there. You see Amazon. strong stocks that, obviously the indecision is up to you, but, we give you the ideas and these are all automated. So, Shopify has been a really strong stock. If you think it's going to continue being strong, it's tested well as far as this in the past. So each one has its own characteristics, and not all symbols model in that 410 are going to model great for every single one of those strategies, which is why we do that filtering. And you can also go into the system here, and there's a link here. I'm not going to do it because, but you can backtest and set your own parameters. So if you don't want the 30 delta, you want to do a 50 delta, you can go in here and you can backtest it to see if that improves your results or not. So you can customize the strategy. You don't have to use ours. That's just basically what we tested. But you can see here, we had 4 different symbols, and this one didn't test very well. It was profitable, but not a good win rate. This one, borderline. So, in this high probabilities, we filter out. It's got to be at least, it's got to be profitable and have a good win rate. Okay. So that's the first part. So that's the studies in general, how we created them. Is there any questions on that? And you guys can type in the Q&A too if you want.